All right, let's get it. Let's get it. Let's get it. All right, so we trading NQ. So we have a lot of potential bounce areas, but it left these relative lows right here, and we got double lows on the higher time frame. Let me go to 1 hour. So you go to 1 hour, you see these relative lows right here at the 1 hour. So I'm expecting that to be the target. Thinking that in this Asia. So and then on another, I'm sorry, that was the 1 hour. Sorry. And then you see right here, we literally just tapped into this bearish fair value gap on the 1 hour time frame. So we got relative lows on the 1 hour, right? Even though you see how it bounced at this level, right? This is a potential bounce area. So and you see we're bearish on the 1 hour. See we're creating lower lows. I'm sorry, we're creating higher lows, higher low, higher low. I'm sorry, higher high, higher high, higher high. I keep saying the same thing. We're creating lower high. So we got a high, we got a lower high, and another lower high. Why we swept out these sell sides right here while creating lower lows. So this was the old low, create a lower low, create another lower low, then we created relative lows. So that's why I'm expecting it to do something like this. Come back down here, come take out these lows, and then go back higher. Because we do got relative highs above us. So on the 1 hour, that's what I'm looking at. So if I go to a 15-minute time frame, you see we created a breaker, we created a low high. So we have relative lows right here also. So we came down, swept it. This zone right here is a weekly. This zone right here is a weekly order block it's on a weekly chart. So you see how we left these relative lows and we left equal lows right here. So I'm expecting it to come back into the zone. Really to create a change in the state of delivery down here to target back down. So that's a 15-minute. So that's the 15-minute. On a 5-minute, we got this this SIBI is bullish for value gap. So I'm expecting it to actually create a change in the state and come close down here to target my lows. And you see here we got the opening range right here. It gapped down. It gapped down also. So saying that's what I'm looking at right now. So you see how these highs are kind of like relative. I'm looking for it to actually like sweep something. Like I thought this was going to be the move. You see how it just displaced crazy down here, but then it bought it back up, then it bought it back down. So this is not the price action that you want. See all this accumulation right here. Fair value gaps getting just disrespected, right? And you see how right here, if you're trading retail trader, like actually doing support and resistance, this is a support level, right? So once it comes to this zone, a lot of traders do breakouts, right? So stop out all of the buyers. Sorry, stopped out all of the sellers. Came back up. They bought it back up. So it's in this range right here. See, we open, came up, 9 o'clock, came, swept it buy side. We swept it in the area where I'm expecting it to bounce at. To reject that. So we had a clean displacement here, but then we got bought back up. Nice displacement, bought back up. So this is kind of like a high resistance. So I'm expecting it to break this 5-minute. fair value gap right here, turning into an inverse. Patience is the name of the game. I ain't got no water. All right, so like I said, we still got relative highs up here. Still got relative highs. So we're in an area where I'm expecting it to reject that. So I'm looking for a nice short position. And we just swept buy side with a lack of displacement to the upside. So that's why I'm expecting it to go back lower. And we got relative sell side at the bottom. I'm gonna have to put Patience is the name of the game. Man. I'm gonna put ES right here, and I'm gonna put NQ right here. Yeah. Yeah, so we got NQ to the right of us, and we got ES to the left of us. So honestly, even if we displace lower, I kind of don't like how it just left these relative highs right here like this. But we got an SMT. I think we got an SMT. Hold on. We may get our entry model right now. Let's see. So you guys see that? That's a lower high, and NQ made a higher high. All right, perfect. Now I'm waiting on a change in the state of delivery, which was right here, and a inverse fair value gap. So I'm gonna use this. Oh yeah, this is nice right here. I'm gonna use this inverse right here. Since it's using it. All right, I'm expecting it to close below here. Hold on, let me make sure I got everything set up first. All right, so we got an SMT, which is a divergence in ES and NQ. So you see how it made a lower high, and right here made a higher high. So now but you see how we actually we try to trade in consolidation right now, right? It's like high resistance. You see all these fair value gaps, none of it's being respected. So I like this right here. We got a change in the state up here. Do we got a 5-minute change in the state? I want to see it close below me. That's a nice one. That's a nice move. I like that play right there. So we ooh, hold on. Where's the reward? All right, so let's see if we can get a close below. So this is the change in state. So you actually want to wait for the change in state on. So we got a change in state up here. So I'm looking for this change in the state. Let me see. So it will be really completely valid once you get a close below here. And you see how we didn't close underneath this fair value gap yet. So it may come get bought back up, but I'm expecting this SMT to hold right here. So you see why that's why you want to be patient. So that's why let me show you. This is why you want to be patient. Exactly what they're doing. So let me show you why you want to be patient. You want to be patient because look what happened. You see how it came down here and then it just bought it back up. That's why you want to wait for the candlestick to close. Look at that crazy wick right there. So you see how many traders got stopped out because of that? So this is the change in the state right here. So let's see. It's a bearish candle. So you see how if you would have gotten in too early, if you would have gotten in too early, I'm live on YouTube right now. I'm live on YouTube. You see, if you would have gotten in too early, and you would have put your stop above this CB right here, you would have got crushed. Look how fast. That's why sometimes you just gotta trust putting your stop at the SMT high. Right? You want to wait. So the change in the state is down here. You want to wait for it to close down here first. So you see that? You want to wait for it to close. Hold on. Seven more seconds. Okay, bomb. That bit, come on, bit. Damn, that bit literally closed on the line. But you see, we finally closed below. But we closed below this fair value gap right here. So now let's see if this fair value gap gets treated as an inverse. And this is Asia market, so you know it's gonna move. It's gonna move. It's gonna move slow. He said, "What do you think about the snipers and forever model versus nigga? The forever model is golden, nigga. The forever model is golden. The forever model is golden. Nigga said, "What's up with the forever model, man? The forever model is golden, my boy." So it's looking like. So you see what it's doing? It literally just be baiting people to hurry up and trying to get in and just take that breakout from here to here, right? That's why it's really and just important to just be patient. It usually will give us an opportunity to get in, right? And if it don't, you just gotta be okay with that. That's really what it is. Because if you get in early, a lot of times you'll get burnt. And then once the move actually happen, you're already in the negative, and now you like, damn, oh, and now you're gonna be revenge trading and all that type of stuff. So now we get a nice close. That's nice. So we get a nice close below right here. So now let's see if this trade works out. Uh, Going short. Put your stop loss. So you should put it at the high, right? But I'm gonna use this wick right here. So we know wicks are gaps, right? Let me use this wick. Uh, 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 uh. All right. I'm gonna use this wick. I'm gonna put it at CE. Even though I should put it right here, but if it stops at CE of this wick, now I know I'm in the right spot, right? Because it gave us everything. It gave us everything we're looking for. So I'm expecting it to literally stop at CE. Let's see what it do. Ooh, crazy. Let's see what it do. Remember, the stop literally supposed to be at this SMT high. That's where it's supposed to be. But if it stops right here and it goes down, that's how I know we actually bearish. I'm on the right side, right? Because we actually got a fair value gap right here. We actually got a fair value gap right here also. But this fair value gap right here is supposed to actually hold, honestly. So bomb. It stopped me out. Okay. Let's see. Let's see. Let's see where it closes. He said, "Hi, I'm new here. What's good?" So you see how it literally stopped right at CE? Y'all see that? You see how the body candlesticks closed literally right here? Let's see if it have enough to break it. And if it just go take all of this, I mean this SMT literally is just not valid because sometimes some SMTs are literally not going to hold, and some SMTs are. So that's why a lot of people actually like don't use SMTs because they don't really know how to differentiate. Like, okay, which SMT is supposed to, stuff like that. But the more you trade, the more you realize. So I like that it stopped here, but I don't like that it came up and wicked up here. So I don't really like that. So it's looking like you see how we just in this range right here. So this is why a lot of traders actually lose a lot of money also because they don't know when to stop trading, right? When to okay, I had enough, right? They don't know, it's a lot. It's a lot. So the fact that it closed above here, I don't really like that. And this trade is still valid if this SMT still holds. Because you see how we closed below this here, but we lack displacement. We lack displacement. So that's another thing is just a lot of people be saying trading is like hard, even though it is hard. But once you learn some skill, so look, we got another SMT. Oh shit, hold on, right here. So look, how you create a higher high? Let's see, 45, 45. Look, it created a lower low, a lower high. Sorry. All right. So now, same thing. You want to wait so you want to wait for a change in the state. Let me delete this line because it created a new order block. So I'm expecting a nice change in the state right here. This is the change in the state, and then an inverse fair value. So let's see if the SMT holds, and if it don't, all of these things will not hold. I think I drew this wrong. Say who do I learn? Who do I learn? I learn from everybody. But my mentor right now is Tremaine. Tremaine Trades. But ICT shit. So look like that SMT. Let's see. Cause you see, honestly, these highs are real like sweet. See what I'm saying? Honestly. So let's see from that first trade, if you would have took it for real, your stop would have been right here. Let's see if we would have got stopped out because it looks like we still would be in the trade. And this is why you want to have a good risk management. Even if you lose trades, if you got a good risk management, you can still get into other trades. Right? You have rules. Right? You want to have rules. And if you have a bad risk management, you're gonna blow up your account and you won't be able to take other trades. So it look like we got a nice let me see. Shit. Press the wrong shit. It look like we made an SMT right here. So right here, we made a higher. Hold on. Let me see if I can draw that motherfucker. Damn, I'm expecting this bitch to drop. I'm expecting this thing to drop for real. So you got oh man, it's an SMT right here. Oh, it's definitely gonna be an SMT. Man, trading sometimes just be so fucking boring. What is this big ass red zone? What the fuck is this? What is this? So I'm like, what the fuck was that? I ain't gonna lie, I don't like the relative highs. So you see how it still left equal highs like that? Like all this shit is kind of still kind of like equal. I don't really like that. So right now, I still don't trust the shorts yet. I did at first, but after you take your first loss, that's how you kind of like start like, hold on, let me just wait a little bit. Trying to see, cause we do got, oh man, I really don't like how it looks. I think we got the it's SMT right there. But you see all of this. You see how ugly this is. That's why it's like I kind of don't want to take this trade because look how ugly price action is like this. Price action is ugly. Look at that. Then we still have relative highs right here. ES still has relative highs. Yeah, yeah. It's not. I don't think it's ready yet. When we was down here, then different story. But you see how we just came, we bounced here, took out some lows. You see what I'm saying? Came pull right back up. So look like we're still generating right now. Let me delete this fair value guy because it's not really respecting no fair value guys right now. And this is what I mean about high resistance. So the difference between high resistance is when you see fair value gaps, right, not being respected, right? So you see how, let me show you high resistance. So you see how it's coming up, it leaves a big fair value gap, but then it comes right back down, disrespects it. Then it comes up. You see what I'm saying? So, but yes, it finally do clean. So you see how it cleans up? See how eventually it cleans up? It cleans up, but then eventually, look what happened now. Look at all of this. It left a fair value gap, but just disrespected it. Left a fair value gap, disrespected it. So it's like it's not clean. Everything is getting disrespected. It's taking the highs, it's taking the lows, making so it's just everywhere right now. So that's high resistance when price is literally just not respecting things in an efficient way. We want to trade in low resistance, right? Go look at all of the video where people actually make money. They're making money on moves where it's just doing this. So like it's just doing it, coming up, coming back down, running up, coming up, respecting the fair value gap, running. You see how it keeps just stopping and stopping and stopping. You don't want to trade like that. You want to trade like this. So you see how we generate all these highs, right? We sweep it. You see how we left a fair value gap right here? Look at this fair value gap, clean as day. Fair value gap. Look at that. Tap it, run away from it. And this is a breaker. Low, high, lower, low, higher, high. If you want to, you can just draw the breaker. The last bullish candle. Look how it tap it. Look how it just taps it to the T. Clean price action. Runs away. You see how it's just running? That's how you want to trade. See how it just down, down, come back up, respect it, lower. You don't want to trade like this. So that's important. Understanding when to trade and when not to trade is also important to trade. So you really want to see how you want to see it just take out highs. So you see how all of these highs are still intact. So people who were short, they're still in this trade. People who shorted it up here, they're still in this trade because the highs still intact. So that's why if you understand the power of three, which is the power of three, which is accumulation, it's accumulating, right? It's tiring people out, right? No, you don't want to trade. You don't want to trade this. That's basically what we saw what it was doing. Now you want to see it manipulate. You want to see how it manipulates lower to get people to actually jump in, right? Which is the manipulation, and then we distribute. Leave a fair value gap, market structure shift, touch it, run the way, right? That's the power of three. So you see how it's accumulating a lot right now. It's accumulating. But we're in an area where I'm expecting it to reject that. So either we're gonna get a clean SMT, right? Either we're gonna get a clean SMT with ES and MQ. But you see how all these high, like all of this is too clean, right? All of this is too clean before the move down. So either we get a clean SMT or we get a just crazy move up here, take out all of these traders that was in, and then go down, which is the manipulation. So that's why trading is actually boring and people lose because you gotta sit through this type of stuff right here. Because remember, the goal is to make more. The goal is to lose less and win. No wait, the goal is to actually you want to keep your losers small and your winners big. So how you keep your losers small? By having good risk management. So this moves down, I don't really trust it unless we literally create a market structure shift on a 5 minute. So that's why I'm expecting this fair value gap right here to get you as an inverse because you see how we came down and used it. Came down, bounce. So Yo, is it news? Why price action so fucking slow? So we are getting a nice displacement, but these is too smooth. I don't like that. I don't like how I left it too smooth. And knowing, remember, it's just high resistance right now. Nothing is really being respected. Oh no, man. Is that a SMT? That'd be the thing. It is a SMT when you think about it. Look at that. This high is way up here. You know? It's a SMT. You see that right here? ES made a higher. See, I made a higher high, right? Wow. Wow. ES. I'm sorry. NQ made a higher high. Wow. ES made a lower high. See how it's lower? That's a lower high. That's an SMT. The problem is it's kind of sloppy, and it still left them relative highs. I don't like how it did that. So I'm not going to trade right now. I'm gonna just wait till I get something that's super clear. No FOMO. No FOMO. Oh man. I'm a 5 day joint, man. Well, I'm this close to a cash out. Honestly, when it's doing that, you actually want to be like on a 5 minute. Look at that. Look at that consolidation. We literally sat here for 40 minutes. We, I literally just sat through all of this. Look at this. This is 5 minute candles. It's like 15 candles. And if you try on a 5 minute, you try on a 5 minute, you're like once trades do what it do, then you want to go to a lower time frame sometime, right? You don't really want to start off on a lower, you don't want to start off on a 1 minute. You want to start off on the daily. You know, it's everything's about your bias. You want to find the bias, which is the direction, which way you're expecting it to go, right? Like I said, I'm expecting it to go down. Why? Because first of all, once again, on a 1 hour, you see we're bearish. We create a market structure shift to the downside. All right. Now we got all of these relative lows right here. We got equal lows and relative lows. Equal lows right here and relative lows underneath that. Right. This is a weekly. This zone right here is a weekly. It's a weekly. So you see how, sorry, it's a daily fair value gap. So you see how we created this weekly order block on a weekly chart. We came into it, ran away from it. Right? We still got all these relative highs right here. So understand, okay, I'm bullish on a higher time frame on a weekly. So I go to a daily chart. Now I go to a daily chart. What do I see? I see the order block right here. So you see this is an order block, down close candle, order block. I see this candle, it came all the way down and left relative lows on a daily chart. So on a daily chart, we left relative lows, right? And if you look right here, I had the weekly zone drawn up. Yeah, so you see how we're digging into this zone right here, right? So this is my draw right now. These two relative equal lows right here. But then when I go on a 1 hour, we're bearish on the 1 hour. We just tapped this bearish fair value gap. We got equal lows down here. So before it goes higher, I'm expecting it to go lower. Sweep this zone out. And then, like I said, this is a 1 hour, right? This is a 1 hour fair value gap. You see this? You see this fair value gap? Wait, what is this green zone? This is why you want to notate. I don't know what this green zone is. I forgot what it was. I'm pretty sure it was an inverse. No, that's not what I had there. 1 hour. Yeah, so we got sell side, we got the 1 hour fair value gap right here. Boom. We got the equal lows right here. We're bearish. So I'm expecting before it go take these relative highs, come take these lows first. Because remember, we're bearish on a higher time frame. Like on the day, on a weekly and a daily, we're bullish. Right? Your best trades, right, is when you're aligning your higher time frame with your smaller time frame. So that's why I'm expecting to come down, sweep out all these lows, bounce at this weekly, this daily, this 1 hour for value gap, and then go back onto the upside. This is the relative right here. That's my target right here. Are we gonna get that right now? The way this price actually moving, we ain't gonna get nothing. So, like I said, the only way I go short is if we inverse. Right? Only way I go short is if we inverse the fair value gap right here. You see how we used it? Turn this to an inverse. I was expecting short from the original right here once it came back down, but you see, we swept sell side and then we tapped it and it just ran away. So I'm expecting it to be used as the inverse. But you gotta wait. Well, I gotta wait. And wait for price action to clean up. Like look at the price. This price action is ugly. And we got a sweep of outside right here, and we got a lack of displacement. So all of the signs to go low, right? And remember the model, Asia model is remember, you chart low, you chart the low and high, right? You chart the low. Let me delete this on right quick. So this is the model for Asia, right? You chart the low, and then you chart the high from 7 to 9 o'clock. This is the highest high at 9 o'clock, right? So once it sweeps either one, it so happens to sweep the buy side first, and it's aligned with what I'm looking for because I'm looking for a bearish, right? So if we sweep the buy side first and then we go back lower, it's aligned with what I'm looking at. So that's why it's kind of aligned with what I'm looking at also. So that's why for me it's a high probability. It's just waiting on the setup. So you see how we took the high, but we got lack of displacement. Lack of displacement is basically like we didn't continue, right? We took the high, came right back into the range. So we're consolidating, which is accumulation. So I'm expecting it to accumulate, sweep out these highs, never get to CE, and then go back lower. So patience is key. 4 key components to be a profitable day trader: patience, risk management, a high quality setup, and discipline. Look at that shit. Back into the range. This is high resistance. If you ain't take nothing from this video, take this. You don't want to trade when it's like this. This is high resistance. You want to trade in low resistance. Right? The difference. High resistance is this. It keeps coming back into the range. Right? Takes the high, takes the low. Don't leave fair value gaps, right? But don't respect the fair value gaps. This is high resistance, right? This is a no go. right? This is a no-go, right? You want to trade in low resistance, right? Which is this. If I could delete all these damn levels. You want to trade in low resistance when it's doing this. This is low resistance. This is when you want to trade. Runs up, leaves a fair value gap right here, respects it, runs away, respects it, runs away, may come down, stop out traders, and then run. This is when you want to trade. When price action is like this. And when your best trades is when you're gonna align price action with time. Came right back into the range. I got the chat open. If anybody got any questions, just type it in. I'll try to answer it to the best of my ability. Right now, I got two live funded accounts, which means I already passed the evaluation part, and I got four. I already got 4 green days of $200, and on the other one, I got three. Other one, I got 3 days green on of plus $200. So I gotta win one more on the other one to be eligible to cash out. On the other one, I gotta win two. Only Asia trade. Nah, I don't trade Asia, but the bias is there. So I'm trying to see if the model is gonna be there also. But I don't really trade Asia no more because sometimes Asia be like this, and when you trade like this, you get chopped up a lot, right? You get chopped up a lot when price action is like this. So I've learned either to wait for price action to clear up more to trade Asia. That's along with my model, or just don't trade Asia at all and just really watch it. Now look, if ES would have did this just now, so look, if ES would have did this and it took all of these generated highs, right? And then if NQ did this, don't take out the highs and then start displacing lower, I will maybe get in. But like I said, it has to close below this inverse right here because right here it is too much trash price action. So how long I've been trading NQ? Since I started futures. I used to trade QQQ, which is basically NQ. So that's how I transitioned. I transitioned from options, trading only SPY and QQQ. That's how I started trading, which was 3 years ago. And I switched to futures since I learned ICT concept. I had to switch my whole trading style a year and a half ago, really like last April. So since last April when I started trading ICT concepts. So basically, I started a year trading futures. I switched. So basically last year January. So basically a year and a half trading NQ. And I've been trading full time. I've been trading the whole time for I've been trading for 3 years. This is my third year right now. I'm on my third year. But I had to unlearn my first year and a half, I had to unlearn everything and relearn because trading ICT concepts and trading trading smart money concept and trading regular are two different things. So I had to basically unlearn. But it's key. You need to understand regular trading, like retail trading. You need to understand that, right? You need what I felt like because it was easy for me to transition because I don't have to relearn. Like you have to learn support and resistance. Like that's vital. You have to learn all of these things. The breaking retest. You have to understand that. You have to understand bullish, bearish. So that's why You got to understand price action. So all of that is regular trading. So you have to learn all of those regular trading first. That took a long time, and then transition to actual concepts. Shit. What about you? How long you been trading for? My goal, I'm trying to get profitable, man. I'm right there. This year, I'm literally profitable right now. Well, I'm really I took some L's this month, so I'm like in the break even stage right now. Hell yeah, full time. Full time is what? When you just trade. So what's full time? Honestly. So what's full time? Trading all day long? Most people don't trade all day long, right? So what's really full time? Honestly. That's a good question. What's full time? Full time would be like, okay, you only make money from trading. If you only make money from trading, would that be full time? Damn, I've been on live for an hour. I think it's the longest I've ever been on live. Okay, so no, I'm not full time then. I don't only make money from trading. So I guess I'm not full time. But I trade. I feel like I trade full time. So, but definitely this is my main focus though. Like my job is not my main focus. Like trading is my main focus. Like I switch everything to trade. Like before I even learned how to trade, I ain't had no job. So before, you know what I'm saying? So trading, it's definitely full time for me. Like I switch my job, I switch everything just to trade in the mornings. Like once I understood I gotta trade live and I gotta trade from the morning session, because that's where trading Asia and London and stuff like that is okay. But eventually you're gonna have to learn how to trade New York session. Unless your strategy and your model is for only London and Asia. That's a different story. If you really want to really scale, you're gonna eventually have to trade the morning session because that's where all the liquidity is, which is that's where all of the quick moves are. So I'm saying like right now we're trading London. Look at this shit. How many traders you know will sit through all of this? Been sitting here for an hour, and especially and I got on after the sweep because that's when my model basically start presenting itself once it takes the high. So if you would have came in here from 6 o'clock, it's almost 10 o'clock. You've been sitting here for 4 hours. You've been sitting here for 4 hours. First of all, once it open up, you have to let it do what it do. Right? Some days it just be trash. So it's basically been 3.5 hours. Asia in New York session is just 2 hours. Right? West Side trade from 9:30 to 12. 2.5 hours. That's it. And it's gonna always be volatile. You can always find a trade. You know what I'm saying? All that shit. So that's why I pick those times to trade. I still don't like it to go lower yet. Unless they start using that 5 minute as an inverse. This is a mean consolidation right here. Mean consolidation. This is really why most traders lose right here. You can't just sit on your hands. Like once so look, I took this first trade right here, right? So they have the SMT, right? But I was basing it off the 5 minute. That's why it would save me. Because if I would have based it on the 1 minute, I would have got burnt. So now look, create an SMT, right? So now the forever model is what? SMT at the high. So let's draw it. Do a quick little teaching shit while we just watching bullshit price action. SMT, that's the first thing. Now you're looking for a change in the state of delivery, right? So you see how we got 1, 2, 3, 4 down closed candles, right? Did we get a change in state of delivery? No, it's not ready yet. Now, start over again. 1, 2 bullish candles. Look at that. Did we get a change in state of delivery right here? No. Now, bearish candle, we got an aggressive close below. So remember, on a higher time frame, all of this on a higher time frame, 5 minute, 15 minute, this is basically like one candle, right? So depending on where you put your low, right? Let's just say, because where I put it at, I put it right here. So we got a change in the state of delivery right here. It just uses low because it kind of sinks. It kind of like and then look what happened. So this initial break, it comes stops right here. What I did was because I actually because that's the model, right? SMT change in the state, and now you're looking for an inverse fair value gap, right? Where is the inverse fair value gap? Right? Where is the inverse fair value gap in these candles? There's none. There's none. Right? There's no inverse fair value gap. So that's why I was using this fair value gap on the 5 minute. Right? This is a 5 minute fair value gap. So that's why I was expecting this one to use this one as an inverse. Right? But look what it did. There's no inverse fair value gap from this move right here. Right? I drew out this fair value gap. And remember, fair value gaps that has the imbalance, fair value gaps that have that value imbalance right there, you have to draw the fair value. You have to draw the full imbalance also, right? If you draw like this, according to ICT concept, if you draw like this, it's not good. You have to draw. You have to include the volume imbalance, right? So this is what I was expecting. Then what happened was it came back. You see how it dug in? The fact that it dug in so crazy like this, I didn't like it already. Because remember, I'm expecting it to do what? For value gaps that we're expecting it to stay bearish, you're expecting it to do this right here. Come up into it, stop at mean threshold, and go lower, right? Go lower. That's not what it did. Look what happened. It just broke through. So I was expecting it to come back to, like I said, to the change in the state, which is right here. Because I had my stop way up here. Right? I had my stop at the SFT high. Look what happened. Came up all the way. And I didn't get out because I just knew this SFT was going to hold right now. Right? Then it came back down all the way. So this is where I was like, okay, bomb, we good. It's going to close below. I put my stop like right here. Because now is the work, it should be done up here. This is a balanced price range up here. The work should be done like right here. This single move down, I'm sorry, to this single move up right here. This is a balanced price range right here. Price should not come back up here. But that's why you want the bodies. You want to make sure you see what's going on. The bodies going to tell the story, but the wick, I'm sorry, the wicks is going to do the damage, but the bodies is going to tell the story. Look what happened. Wicked it, used the fair value gap, and still ran. They never closed below here to use as an inverse, right? And then it came all the way back up. And that's when I got out. So I got out. And that's when I was like, oh my God, look at all of this low resistance. And then I waited and I waited and I waited and I waited. See what I'm saying? So a lot of traders would have got back in, got back out, got back in. So that's how I learned to actually, like, you know what? Just slow down and just wait and understand to let price tell you. I already know this is high resistance. I'm not supposed to be trading right here until price cleans up. So that's why when it was down here, I said, you know what? I'm gonna just let it. And I got out. I said, yeah, because I know it's gonna end up coming right back. Look what happened. Gonna end up coming right back. So nothing is being respected right now. And we still have these clean highs. Look at ES. ES still has, look. ES still has all of these clean highs right here. Unless this SMT gonna hold. But the way the SMT looks, I don't really like how it looks. But who knows? So that's where we at right now. So I just been sitting on my hands for the last fucking hour. I used to lose so much because I couldn't do what I'm doing right now. And this is why you actually everybody who trade, if you really want to trade for real, you should start a page. Start a page how to trade. Because when you give out information, you give out content, you're gonna get so much better because you're making content. Right. And when you make content, it actually holds you accountable. You know what I'm saying? But it may not be for everybody. Like I just got my Discord just for me, right? My Discord is for me. Like, it's open to people. People can come in, copy my trades and stuff like that, learn from me. But it's really just for me to actually become better, right? So last year, overall, I lost $4,800 in the whole year. 4,600 dollars all last year. That's not bad. This year right now, I'm up. I'm probably up I'm probably up between like 500 to $1,000. So it's like I'm kind of like right at break even basically. So 6 months into the year, man, let's get it. Getting better and better, man. You have to learn. Another thing, you have to learn from people. Like trading on your own, bro. Trading on your own, bro, is gonna be so hard. It's gonna be so hard because this shit is like actually Spanish or a language that you don't understand. You have to learn. You have to understand what all of this stuff means. It takes so long to learn this shit. That's why if you don't have motivation, if you don't know your why, you're honestly you're not gonna stick it. Like you're not gonna like stick it out with trading. Because after the first 2, 3, 4, 5 years, bro, and you don't make money and you're not getting better, you're gonna end up giving up. You're gonna end up leaving, coming back. You're gonna leave a little bit and then come back. You're gonna leave and then come back. That's how 90% of traders trade. So that's why I learned what not to do first. All I did was learn what not to do. What not to do. So you trade ICT. Yeah, I trade ICT concepts. I learned first, like, okay, what not to do. What not to do. That's the first thing I learned. Bitch. What not to do. first thing, first thing I learned what not to do was you have to keep your losers small and your winners big out the gate. That's the first thing I learned. I learned from Aristotle. That was my first mentor, Aristotle. Keep your losers small and your winners big. That's the first thing I learned. So it tied in. It tied in with risk management, right? It tied. So I was like, oh shit. So I learned risk management first. So that's why I don't lose so much money because my risk management is always good. How long it took you to learn how to trade? I'm still learning how to trade though. What you mean? It's a constant thing. It's not like it's not like riding a bike. All right, you learn it and that's it. Or is you know what I'm saying? Like it's more like it's not even like sports. Cause once you learn how to play sports, you got it. This is not that. Like with trading, okay, once you actually learn it, become great, now you got it. But unlike professional players, they still practice. But it took so it all depends. So to learn just to learn how to regular trade, it took me like honestly like a year because I'm a slow learner. So it took me like a year, bruh. It it took me like a year, and this was before ICT concepts. You see what I'm saying? So I was trading options, so I had to learn the ask. I had to learn what the ask and the bid is. I had to learn all of that shit, the delta, the theta, and that's real money. When you trade options, that's real money. You know what I'm saying? So I learned that shit first. So it took me a while to learn because I had to actually okay, what's a candlestick? You know what I'm saying? What's up? Like I had to man. So I say it took me like a year and a half. He said, "Yeah, I want to sing. Still learning the charts before I fully trade, bruh. Get a funded account. Pay only $50 and pay up, and don't use your real money, bruh. Just get a funded account. You're only gonna pay $50, and if you potentially pass it, you can cash out. You know what I'm saying? But you gotta pass it and then pay the 150 to make it eligible, and then you can potentially cash out. but you're gonna save so much money, bruh, versus trading real money. Cause we go to work, bruh. When you go to work for a living, when you go to work, them hours that you hours per hour that you go to work and then you losing in trading is not the same. So we're literally like tied to the money. So that's why when you trade real money, you looking at the money so much. You can't focus on the chart because you're looking at the money so much. Because you know what I'm saying? So that's why risk management and only trading with 10% in your account, you know what I'm saying? Just need to learn a strategy. Shit. You sure you just need to learn a strategy? You know about bias? Because the strategy is the last thing, bro. Honestly, the strategy is like the last thing you need to learn. Like the strategy is not the most important thing because it's gonna be you're gonna see your strategy all the time. You know what I'm saying? Like you're gonna see your strategy a lot. See, yes, I do top down analysis. Well, shit, that's the main thing. So once you understand that top down analysis and understand the bias, once you understand that bias, so the strategy is not yet. You gotta be patient. You gotta be patient. So it's like, so the bias is okay. Basically, where is it gonna go? Where do you think it's gonna go? Like I think it's gonna go lower because of all of the reasons I explained already before. Right? That's why I think it's gonna go lower. So that's my bias. So that's the first thing. So that's what bias is. Where do you think it's going to go? That's the main thing in trading. That's what you gotta get that first. Because even if you get the strategy, even if you get the strategy, and you may be taking the strategy in the wrong direction, and it looked like it's gonna work out a little bit, and then it come back in the reverse. See what I'm saying? So understanding where is it gonna go first, that's the main thing. See what I'm saying? So remember, there's four key components to be a profitable day trader, right? It's patience. You need like right now, I'm being patient. Because if I wasn't patient enough, I would have been taking all these trades in here and I would have blew my account up. You gotta know when to trade and when not to trade. All of that is incorporated into being patient. Then you need discipline. Discipline ties in with patience. You gotta know when to trade, when not to trade. You gotta be disciplined to understand. Okay, you know what? I'm gonna wait. Like right now, I'm being disciplined. Why? Because I'm waiting for better quality price action. I'm waiting for either this crazy manipulation and then price action, market structure shift, or SMT market. You know what I'm saying? Inverse, and then good price action, right? And then good price action. So that's patience and discipline. That shit, you're gonna always patient and discipline. You're gonna learn it. You're gonna be going through that shit every day. Every day you're gonna have to get better with patience and get better with discipline. You gotta be disciplined to your rules. What rules you got? What's your rules? You got 5 trades a day, 8 trades a day, 1 trade a day. You know what I'm saying? You gotta be disciplined to your rules. And then the last thing, well, risk management. So we got discipline, patience. Then you need risk management. I already broke down risk management to you. The last thing is the high quality setup, which is the strategy. That's the last thing you need. Because once you got all those things, the strategy is the last thing. Because you're never gonna master patience or discipline, right? You're never gonna master it. It's just like you get better at discipline and better at being patient. Because sometimes we're gonna be impatient. Sometimes we're not gonna be disciplined, right? So, so what's the first thing we did to supposed to do when it comes to trading? So what's the first thing we supposed to do when it comes to trading? Well, starting from a beginner. Start from a beginner. The first thing, shit. Starting from the beginning. Oh Lord, the first thing, shit. It's so much fucking thing. The first thing is learn. You gotta learn the chart. Yeah, you gotta learn the chart. You gotta learn how to use this chart. That's the first thing. First thing, how to use the chart, how to draw the lines, how to delete the lines. Right? You gotta learn that shit. fuck the money. You got to learn the chart. Okay, how to use the lines, right? What are these lines, right? And how to draw the lines. Once you learn how to use the lines, draw the lines, after that, it's candlesticks, which is what these are. You got to understand the candlesticks. So understand how to use the chart, drawing the lines and shit like that, understanding all that shit. Then the candlestick, because you have to understand how to draw, how to use, how to move it up and down, how to do all the, you got to learn that. Then understanding this damn candlesticks, because that's the main thing. Candlesticks. Understanding bullish, bearish, a bullish candlestick, a bearish candlestick. Understanding there's 4 key components to a candlesticks, which are, so each candlestick. So it's kind of confusing, but then it's not, because some candlesticks is going to have all 4 key components, which is an open, a low, a high, and a close. All candlesticks is going to have that. But some candlesticks, like, so look, for example, this candlestick right here. This candlestick right here, right? How the fuck that shit not working? Oh, right here. This candlestick right here, right? Right here. So we have a open, the candlestick open. So this candlestick, so let's start from the one to the left. This candlestick right to the left, it opened. I'm sorry, it closed right here. Then it opened. Bam. Open here. We have the high wick here. So that's 2 things. We have to open, then we have a high. Then we have a low, and then we have a close. That's the 4 key components to a candlestick: the open, the low, the high, and the close. But then look at this. This candlestick don't have that wick right here. There's no bottom wick or there's no top wick. You gotta understand that too. You know what I'm saying? So once you understand all about the candlesticks, then you understand about, then you go into support and resistance. Yeah, support and resistance. Once you learn about support and resistance, then you'll understand about, yeah, that's it. Those are your 3 right there. That's what you got. That's where you got to start at. Learning the chart, then learning the candlesticks, and then learning support and resistance. Like this is right here. This is support. This is support right here. And then this is resistance right here. This is key in trading. All right. So look, support is always at the bottom. Support is the floor, like a basketball. The basketball bounces when it hits the floor. Like you throw it from your hand to the floor, and then it bounces at the floor and it bounces up. That's support, right? Resistance is the top, the ceiling, the roof is at the top. Same thing, like when it bounces at the floor, it's gonna bounce at the top. I'm sorry, it's called reject. So resistance is rejecting. It's rejecting at the top. Support is at the bottom. It's bouncing, right? So like it's like this. We have support. We reject that. We reject. We bounce. We reject. We bounce. We reject. We bounce. We reject. This is support and resistance. Support is always at the bottom. Resistance is always at the top. Now, this is the key. Once you understand that, then now you got to understand once it gets broken, right? Like once the price goes up here or down here. So now this is support, this is resistance. So let's say it breaks this support, right? It breaks the support. Oh, so this support is going to turn into resistance now, right? So now I will be expecting it for this zone, because it was support, now to be used as resistance. So I'm looking for it to bounce here and create a new support. So the fact that you see every time it come down here, it's stopping here and then coming back up. Bounce, reject. Bounce, reject. So now look what happened. Where would be the support? The support would be here. Why? Why would the support be here? Because every time we come here, we bounce. Every time we come here, we reject. We come here, we bounce. We come here, we reject. Same thing. Once we finally break above this resistance, now old resistance turns into new support. So now I'm expecting this to bounce and to go up and create a new resistance, right? Okay. So now this is the new resistance, and now this is the new support. Why this is the support? Why would this be the support? Because every single time we come into this level, we reject. We bounce, we reject at resistance, bounce at support. Reject at resistance, bounce at support. Type shit. So that's support and resistance. So that's just learning that right there. That's gonna take some time also. Uh, 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 uh. All right, hold on. What the fuck I was doing? How you? Oh, I'm tripping. So right here, these are all of the things you need to learn how to use the chart. All of these things right here. So you see, we haven't been doing nothing this whole time. Nothing. How long you been doing this for? What trading? I've been trading for 3 years. This is my third year. It's my third year, man. I took a lot of losing. So I said, you know what? I'm gonna learn how to lose. I'm gonna learn how not to lose. Like that. So all I did was learn all of the bad ways to trade. I learned what not to do. I heard a time session matters. Hell yeah, the time session matters. Like this session that we're trading right now is low liquidity, which means it's basically not going to move as fast, right? So it's important because if you trade big boy money, you don't really want to trade this time frame because it's not going to really move how you would like it. So now, if you want to trade, and this is usually prices are going to move like this, which is high resistance. You want to trade in the New York session, right? Because price moves. See how price moves way better? You see how price moves way better? This is when you want to trade. But London, look at London, 5 in the morning. So look, this is the overnight session. Look at this. This is after the Asia. We're trading right now, Asia right now, right? So London starts like around 12, like 9 or 12 o'clock. I think it's like 12 o'clock, but from 12 to 5 in the morning. So look at all of this. This is bullshit price action. Low, high, take the low, take the high. You see what I'm saying? This is not clean at all. So it's not clean at all. You can get stopped out a lot. This is why I don't trade this. But then look, you see how pre-market starts to look a little bit better from basically like from 7 o'clock all the way to 9. See how it looks a little bit better. So this is probably when you want to trade more. But the best trades come New York session. See what I'm saying? So it all depends how you. It all depends on you. Everybody different. It's 10 o'clock. 4 hours of just fucking nothing. I want to see it come take some of these highs right here. All right, so we got a SMT. You see how ES made a lower high and NQ made it higher high. So now the next step we're looking for is a change in the state of delivery, which would be, from the looks of it, I would just use this low right here. I'm gonna use the wick because that what you want it to close below the wick, and then once it close below the wick, then you move it to the body, and then hopefully uses this as an inverse. So trading is a lot of patience. It's a lot of waiting. It's a lot of waiting when it comes to trading. So the SMT did not hold. That's why you want to be patient. I'm about to get off of here, man. But this is what I was expecting, though. Ooh, nasty, nasty. So that was nasty right there. That's why you be patient. That's why you be patient. Look at that, clean. So now we get a nice sweep. Sheesh. You see why you be patient? Damn, that felt pretty good. So we took those highs. Now let's see. So I'm looking for it to be weak, right? Weak displacement past those highs. Do you know what weak displacement past these highs mean? And I'm expecting it to stop right here though. If it do go up, I'm expecting it to stop right here. But if it ends up doing something like this, then that's a different story. Let's see what type of displacement we get. So there's no SMT. Let's see if we. So I drew this fair value gap, but I'm expecting it to use it as an inverse. All right, this is basically what I'm expecting. So I'm expecting it to do a lack of displacement. All right, but so far, this is the liquidity right here. This is where I'm expecting it to stop at. So a lack of displacement would be something like this, right? This would be something like a lack of displacement. What I don't want to see if it does this, right? I don't want to see it do that. So you see that nice displacement? You see that? You see how that shit just? But then you see how it went up here, but then it's back down here. That's what I mean about lack of displacement. But the aggressive move is something good. If it ended up close, like I said, if it start closing above here, now that's a different story. I ain't gonna lie. You see how I said I wanted it to stop right here? That's kind of crazy how literally just boop. So now I would be expecting this to come into this fair value gap and use it as an inverse. Let's see what it do. Okay. So now that it's inside of this fair value gap, I'm expecting it to actually like dig into it a lot, right? It can't leave it, right? But I'm expecting it to actually use it as support for a little bit and then for it to flip and use it as resistance. What would be perfect if it actually uses this fair value gap and brings it lower? Like it'll be nice. It'll be crazy if it literally respects this. So remember, the wicks do the damage, but the bodies tell the story, right? The wicks do the damage, but the bodies tell the story, right? So I'm expecting it to reject. It's crazy how I actually like call this out to the T. All right, but let's see what it do. Remember, so that's a good sign. So you see how it stopped and it went down. That's a good sign of rejection. So let's see. It's coming back into it again to test it, to test how weak or strong it is. So we got this bullish fair value gap, and then we got this bearish fair value gap. So let's see which one holds. What would be ideal is for it to create a change in the state of delivery, right? And then actually start closing below here. Oh, wrong thing. Start closing below and close below this low, right? And then use this zone as an inverse to go lower. That would be lovely. So we got a nice little rejection off of this. So we got a sweep of liquidity. We got a rejecting or the rejection at this 1 hour. It's a 1 hour bearish fair value gap. Remember, your best trades are going to come when your higher time frames align with your smaller time frame. Trading is going to be a lot of waiting, a lot of waiting, a lot of just being patient. So let's see if we create this change in the state of delivery and aggressively. I would like for it to aggressively. Remember, because if it's aggressive, that's a good displacement. Remember, we're looking for displacement. And you see how we got like better price action. Remember before price action was like this. So you see how price action is just like this right here. Once we actually aggressively took all of these highs, right? We activated actually liquidity. So that's why we got like, a nice. So this is nice, right? Clean. So let's say we could get some good price action or close below this low, you know. So let's see if this bullish fair value gap is going to hold. That's one thing we're looking at right now. You said, what time frame? I gotta understand liquidity. Yeah. So hold on, I'm gonna tell you about liquidity right now. I'm gonna tell you about liquidity. Yo, what to do? I'm on TikTok. I'm on TikTok live right now too. So we on TikTok live and we on YouTube live. So liquidity is basically highs and lows, right? That's liquidity, highs and lows, right? I'm gonna show you in a second. So right now we're in this bullish fair value gap, and this is a bearish fair value gap. You see how it's rejecting. Remember I said about support and resistance, right? This is supposed to be the support. This is the resistance, right? So let's see if we get an aggressive close below here, then treat this as an inverse. Okay, that's a good sign right there. Remember, but the wicks do the damage, but the bodies tell the story, right? That you have to wait for it to close, right? It's 22 seconds left. But so far, we got good price action so far, right? Okay. So we got a nice close below. Let's see if it can continue. Man, I seen below it closed below equilibrium and then it created a change in the state of delivery, right? So I'm expecting I'm gonna use this wick. I'm gonna use this wick to see how far we dig into the change in the state of delivery. Right? Let's see how far we can dig. This wick right here. We stop that consequent encroachment. Remember, it's all about being patient. Would it be lovely to create another change in the state and then we just start managing everything with order blocks? So you see how we get a sweep, We get the sweep right here. We get the sweep of liquidity right here. We get an aggressive move down, fair value gap, pull back up to this 1 minute fair value gap, displace lower, create a change in the state, right? So remember I said before, you wanna get the body. You wanna see the body. Let's see what it does when it hits the body. So I'm expecting this zone right here to get used as an inverse, right? It's the wrong color. So it pulled. You see how it pulled back? It pulled back to the change in the state of delivery right here. Let's see if we can get a aggressive close below, or let's see what it does. Remember, you never know what the market gonna really do, right? So that's why you want to have actual context. Oh yeah, back to liquidity. So I'm gonna do it over here. I'm gonna do it on this chart. Show you liquidity. Want to learn something about liquidity right quick? Hold on. Why should I keep doing that? All right, there you go. All right, so liquidity, right? This is liquidity. Basically, like I said, highs and lows, right? Highs and lows. So like, look, this is liquidity. So this low is liquidity. This low is liquidity. All right. This high is liquidity. This high is liquidity. This high is liquidity. Right? So liquidity is basically all highs and lows. So now, once the liquidity gets swept, this is what getting swept means, right? So this is liquidity right here, right? This is some more liquidity. Both of these are liquidity pools, right? Liquidity zones. So now, so the price is here. Once price start coming down, it's getting closer to the liquidity, right? These are where people's stops are, right? So if I'm long, this is where your stop is at. Either gonna be here or here, right? So it comes in and it takes the liquidity, right? It takes it. We mean like it sweeps it. It closes below. It closes below. But you see, it still left some more liquidity down here. That's how sometimes you see how it'll go low. It'll go low, but then sometimes it'll still go lower because there's more liquidity below us, right? Then remember, so the market loves to do four things. The market loves to hunt the liquidity, which is highs and lows. So the market generates the liquidity, generates the highs and lows. It hunts the liquidity, hunts the highs and lows, rebalances to equilibrium, which is it pulls back to equilibrium of whatever range it's in, or it rebalances to an inefficiency, which is a fair value gap. So that's the five. Those are the four reasons why price moves. Oh, I understand. Or has to come to the liquidity. Yeah, because that's the money. Your stop loss, where you put your stop loss at, that's liquidity, the money. These lows. So right now the liquidity is It's this low, there's liquidity this high, this high, this high. But the most liquidity is going to be up here, right? At like the most liquidity is going to be like at the clear high and low. Right now, the clear high and low is here. All of this is liquidity. So this is what I mean by relative lows, equal liquidity. It's a lot of liquidity right here, right? It's a lot of liquidity right here. So the market, it generated it. So remember the market, oh shit, that shit pulled up. God damn, hold on. Okay, some good information right here. So you see how this is a fair value gap, right? So you see how, look at the bodies. All of the bodies is in the upper half. You see all the bodies? All the bodies are in the upper half. So you see how these some of the bodies is below here, but look, you see majority of the bodies in the upper half of the fair value gap. If you're bullish, that's what you want to see. But if you're bearish, you want to see majority of the bodies be down here. See what I'm saying? So originally, I'm gonna delete this zone right here. Originally, I was expecting this fair value gap to be used as an inverse, but what we're looking at right now, if it would be used as an inverse, it will be hitting and going lower. It will be all of the shit will be down here. It'll be a lot of stuff down here. It's only a little bit down here. So the bulk of the bodies is up here, showing that this is still a support zone. It's still not ready to break out at. And like I said, remember, your stops is going to be where? Here, here. Look what it did. It went lower. So everybody who thought it was gonna go lower, like me, but I'm not in the trade yet. Everybody who thought it was gonna go lower, they brought they stop to these highs right here. These small little relative highs. It's called internal highs. And look what it did. Came up, took out everybody who put their stop right here. So that's a sweep of liquidity. I ain't gonna, I'm giving y'all boys game right now. God damn. Hold on. Hold on. So you see how, let's say I got into this trade, right? And put my stop, whatever right here. Even though you lose trades, you can still learn from trades, right? Like, even though, let's say I would have got to the trade for real and I would have lost because I ain't put my stop up here or even right here. Look how much we learn. Understand, like, yo, this 1 minute fair value gap is still holding. How is it still holding? Because why? It's majority of the bulk of the bodies is in the upper half. Down here is only a little bit of wicks, right? Showing that this is still holding. So this wouldn't have been a good trade because why? Look what price action is doing. Price action is actually holding this level. If you understand price action, you will know that it's holding. This is still a support zone. You will have to wait for it to come down here and close down here, right? Close down here, then use it as an inverse, right? So let's see. And just because it's holding, that don't mean it's going to break through, right? So it's using it as the best fair value gaps is going to use it as a fair value gap, right? You see how it used it as a fair value gap? It stopped hella people out. And then now, once it closed below here, now it can just use it as an inverse. That's good price action. You know what I'm saying? So you just gotta be patient. It's gonna take a lot of time to really understand what's really going on, right? But once you do get it, this is a skill. This is a skill that, bro. Once you learn this skill, man, you make money from this skill. It's endless. It's endless amounts of money that you can make, right? Most people make $200 at a job, $300 at a job. You can make $300 in a blink of an eye in trading, or you can lose that money. You can lose that money too. Like basically what I've been doing the last couple years. Finally, this year I'm a little bit profitable, right? So that's what it's about. Getting better. It's about becoming a good trader, not focus on making money. That's why I say just get a funded account, right? Get a funded account. Don't trade your real funds until you really understand what's going on. And once you understand what's going on, keep trading on a funded account, right? Keep trading on a funded account until you cash out. Once you cash out a couple times, then you take that real money and then you put it into your live account. See what I'm saying? I bought it. He said, I bought at a good time too, champ. Good shit. Angel. Well, you long, you short? TikTok community. I've been on live for 2 hours, bro. Looking at this damn chart. But that's what trading is, man. Being patient. Think about it. Can most people sit here for 4 hours and not make no money? Most people can't. So that's why most people can't really be traders, bro. Because it's so much you gotta learn, and it's so much changing that you gotta do. But if you stick it out, like they say, if you stick it out and you keep on learning, getting better and learning and figuring out and learning some more, you're gonna become a better, like right now, I'm becoming a better loser. That's the key. You want to become a better loser. Like I got this book right here, How to Become a Better Loser. That's eventually what you're gonna start doing, like me. I'm becoming a way better loser, bro. Real stuff. Like you're gonna lose money, right? And then you're gonna learn how to lose a little bit of money, right? Then you're gonna lose a little bit of less, and then you're gonna break even. You're gonna stop losing money, and you're gonna just win, lose. You're gonna break even. You're gonna be at zero at the end of the day. And then you're gonna finally start making a little bit of money, and then then that's when you scale it and scale it and scale it. Yes, sir. ICT concepts, my G. You already know how we move around here. I feel like ICT concepts is the best, bro, because it gives you a reason. Like it's a reason why, like train support and resistance and stuff like that, supply and demand. If it don't work, you don't know why it didn't work. It's just like, okay, damn, it didn't work. Like, okay, it just didn't work. ICT concepts is more context to it. It's a reason why everything works and don't work. So I'm saying, so that's why I like ICT concepts. But I'm still new to ICT concepts. I've been training ICT concepts for a year and like since last April. So it's still a lot I gotta learn. But I feel like I got a bulk. I got a bulk of the information down pat. So now it's just actually just trading because I already got my model. I already got all that. So it's really just winning more than you lose, being patient, discipline, risk management, high quality setups, knowing when to trade, when not to trade. This is some shit is when you're not supposed to trade. This is understanding low resistance versus high resistance. You see how right now we got like decent price action right now, but we back into consolidating. You know what I'm saying? You don't want that. That's why trading Asia and London is not good because it do a lot of this shit. And it's already matter of fact, it's already 10 o'clock. Once the model, so the model trading Asia, once the model from 6 to 7, once it plays out, if it don't play out by 9:30, it's dead. So that's why I'm like, I forgot about that. Like the play can still work, but like the high quality setup is not going to work out no more. So that's why I'm basically kind of done. But I'm just walking down price action. Hell no, I don't even trade Asia. I'm just actually just like learning more price action. So I like why not just pop it open on Asia? But I trade 9:30 New York session. Cause when you trade New York session, you don't gotta worry about. Well, it may still do this crazy ass consolidation. But look, let me show you 9:30 session. So you see how it moves way better. This is when you want to trade when it's moving like this, right? Look, this is London. Look at London. You don't want to trade this, right? This is crazy. So you see, look at New York. See how it moves? It's moving. It's moving. Some days you're gonna get some good price action. But you look. See, this day was a whole bunch of nothing. But you see, it still moved, right? It still moved, right? It still moved. Sometimes this shit's still holding bullish right now. I didn't think it would do this much consolidation, bro. Look how much consolidation that is. God damn. So remember, the market loves to do three things also: accumulate, which is called the power of three, right? Accumulation, manipulation, accumulation, manipulation, which is the fake out, and then distribution, right? So remember, the market loves to create these highs. The market loves to create these highs, which is called generating highs, right? The market is going to generate highs and lows. Then it's going to hunt the highs and lows. See how it hunted it, sweep. Then it's going to hunt the other opposite end. Then it's going to rebalance, pull back, to an inefficiency, probably a fair value gap. Then it and then it re and it retraces to an inefficiency or a fair value gap. I'm sorry. The market lets do four different things. It generates the highs and lows, right? Then it hunts the highs and lows. Then it pull back to an inefficiency, which is a fair value gap, or it pull back to equilibrium of the range, which is if you use your fib, if you go from this low to this high, it pulls back to 50% of the range, which is OTE. So yeah, price action is still doing fucking bullshit. He said, "Do you trade news though?" Hell no, I don't trade news, nigga. That's gambling, nigga. Trading news is gambling, my G. Trading news is gambling. He said, "I'm in the long right now for 700. Let's get it, boy. In the long right now for 700. Where your stop loss? Where your TP at? I'm gonna go long right here for you. Where your stop loss at, my boy? Where your stop loss at? I'm gonna just put it below. Bro said he long. Let's get it. Bro said he long. Let's get it. Where your stop loss at, my boy? Bro, 2 hours on live is crazy. I ain't gonna lie, man. I'm about to go give me some food, man. I appreciate y'all for tuning in. Follow me at Casino Trades everywhere: TikTok, Instagram, YouTube. Casino Trades. Do not get scammed. Don't forget about that. I would never DM you unless you DM me first. You know me? But yeah, man, I catch y'all boys on the rebound, man. You about to get up out of here, man. Price action doing a whole bunch of fucking. Well, it's not gambling if you. Oh shit, let's see what he say. Let's see what this nigga say. So it's not gambling if you enter way before the news comes. Okay, hold on. That's another story now. I ain't know you know about that. So now look, if I'm in the trade, it all depends though, bro. Like, cause remember, the news is gonna just spike it to the liquidity that I really want to go to, right? So if you're already in a trade and I'm expecting it to go higher, and depending on what type of news it is, because if it's a high impact news, you tripping. But if it's a low impact news, like a yellow folder, orange folder, and my bias is correct to the up, if my bias to the upside, all of that, and I'm already in the move, I may stay in there. But I'm gonna pull, like, let's say I'm in news, right? News about to come. I'm gonna literally pull my stop literally super tight, because sometimes what it could do, it could wick your ass all the way out and then go up. what I'm saying? So when I do news, my stop loss is real tight, nothing too crazy. Like let's say my stop loss was down here at first. If I know news coming, I'm gonna put my stop loss right here. Cause it may come just eat this up and then go higher. You know what I'm saying? But if I'm not in a trade, I'm definitely not. If I'm not in a trade, I'm definitely not getting in until a news start. And if I'm in a trade already, if it's a high impact, I'm gonna get out. Majority 8 out of 10 times, honestly, 8 out of 10 times, if I'm already in a trade and news about to happen, I'm gonna get out. 8 out of 10. It all depends. If I'm up on a day, if I'm green already on a week, I may risk it a little bit. But if it's one of them break even days, you know what I'm saying? I'm ready. I'm negative on the week. I'm negative on a day. I'm 0 for 1 on a day. I'm 1 for 1 on a day. I'm gonna just get out. Type shit. So if you like this information, man, if you like this type of game I'm giving, man, shoot me a follow. Right? I trade every day live 9:30, man. So I'm just like you, man. I'm just like you. I'm just a person, sharing his experiences. I'm only going live because it allowed me to get better while I go live. It allowed me to actually learn from my mistakes and teach people at the same time. Because if I can't teach somebody, it's probably because I don't know enough, right? You want to have your mentor. If your mentor is not constantly learning, if your mentor is not constantly getting better day in, day out, you might have the wrong mentor. You know what I'm saying? But it all depends. So I appreciate y'all, man, tuning in. I catch y'all boys on the rebound. Let's get up out of here.